Okay, hey, welcome guys. It is Thursday night, um, June the 12th, in preparation for Friday the 13th, Friday, June 13th. Ooh. All right. Enough goofiness. All right, we're going to continue on with the interview with Larry Height in Market Wizards, interview with top traders. I don't have a whole lot to go over on the charts, but I'm going to read quite a bit of the paragraphs here with Larry. So just bear with me. You don't have to read a book; you get to listen to audio book. Isn't that great? I'm going to repeat what I ended with yesterday, and that is that the speculator can choose to only bet when the odds are in his favor. That is an important positional advantage. Um, one of the questions that Swagger asks him, it says, once you are stopped out of a position without the system providing an opposite signal, like for example, if you're long and you're stopped out on money management rule without a sell signal being generated, what gets you back into the trade if the market reverses to its original direction? And Larry Height's answer is, if the market makes a new high, we get back in. So I thought that was interesting. Okay, so some of the other stuff he had on money management stuff. Um, were there any personal traumatic experiences caused by failure to heed market risks? He said, not for myself, but I have continually witnessed examples of other people being ruined by failure to respect the risk. If you do not take a hard look at risk, it will take you. When I was a kid, I got my first motorcycle. I had an older friend who would always get into fights, and he told me, Larry, when you are on a motorcycle, never argue with a car. You will lose. That same lesson applies to trading. If you argue with the market, you will lose. Um, Later on in that same answer there, he says, I have a good friend who started from a very humble beginnings. His father was a sanitation man. Anyway, he was a very bright guy and he got into option arbitrage. He was extremely good at it and he made a fortune. I remember visiting him at a palatial estate that he bought in England, which, by the way, that palatial place that he bought in England, he says it here in the thing. I'll leave that picture up for you to glance at. So this he bought a palatial estate in England. He may have been a great arbiter, but it turned out he was a bad trader. He developed a trading system that made money. One day he said to me, "I'm not taking the sell signal in gold. It doesn't look right to me. Besides, almost 50% of the signals are wrong anyway." Not only did he not only did he take this not take the sell signal, he actually wound up going long. Sure enough, the market went down. I told him, "Get out." But he insisted, "Oh, the market will come back." Well, he did not get out. He lost the mansion and everything else. Now he lives in a rented box on a street with 100 other ticky tacky houses. To this day, I still remember the name of his estate. Beverly. So this is the Beverly Estate in England, and this is what this guy was talking about. Um, he's still one of my best friends, and his loss of that huge house and an enormous had an enormous emotional impact on me. He had it all, and he lost it all, and all because of one trade. The irony is, had he followed his system, he would have made a fortune on that trade. I will tell you another story. I have a cousin who turned $5,000 into $100,000 in the options market. One day I asked him, how do you do it? He answered, oh, it's very easy. I buy an option, and if it goes up, I stay in it. But if it goes down, I don't get out until I'm at least even. I told him, look, I trade for a living, and I can tell you that strategy is just not going to work in the long run. He said, Larry, don't worry. It doesn't have to work in the long run. It just has to work until I make a million. I know what I'm doing. I just never take a loss. I said, okay. In his next trade, he bought $90,000 worth of Merrill Lynch options. Only this time, it goes down and down and down. I talked to him about it 1 month later, and he tells me that he is in debt for $10,000. I said, wait a minute, you had $100,000. You bought $90,000 in options. That should still leave you at least 10,000 even after they expire worthless. how could you have a deficit of 10,000? He said, well, I originally bought the options at 4.5. Then when the price went down to $1, I figured out that if I bought another 20,000, all it had to do was go up back up to 2.75 for me to break even. So I went to the bank and borrowed $10,000. Respect for risk is not just a matter of trading. It applies to any type of business decision. I once worked for a firm where the company president was a very nice guy, hired an option trader who was brilliant but not stable. One day, the option trader disappeared, leaving the firm stuck with a losing position. The president was not a trader, and he sought my advice. Larry, what do you think I should do? I told him, just get out of the position. Instead, he decided that he was going to hold on to the trade. The loss got a little bit worse. Then the market came back and he liquidated the position at a small profit. After this incident, I told a friend who worked at the same firm, Bob, we're going to have to find another job. Why? He asked. I answered, we work for a man who has just found himself in the middle of a minefield. And what he did was close his eyes and walk through it. He now thinks that whenever you are in the middle of a minefield, the proper technique is to just close your eyes and go forward. Less than 1 year later, this same man had to liquidate a huge delta neutral spread position in options, which is a balanced position whose value will change very little for the small price moves in either direction. Instead of just getting out, he decided to get out of the position one leg at a time. By the time he had finished liquidating his position, he had gone through all of the firm's capitals. Um, all right. Oh, my side notes. My side notes is don't hold when it hits your stop. Don't hold when it hits your stop. Don't hold when it hits your stop. Um, so that's just over and over. Good advice there from Larry. We'll pick back up on the rest of the, or I don't know if we'll finish the rest of the chapter. Actually, yeah, we probably will finish the rest of the chapter tomorrow. So, or let's see, tomorrow's Friday, so I guess it'll be Sunday night. Anyway, yep, this is amazing. This is something to shoot for, but not to let go of. If you get this when you acquire this, do not let it go. All right. So I wanted to start here with the 60-minute. Just kind of point out, we still have this gap here when the Asians gone wild thing up here. But coming in this morning, Jacob and I, we were looking at the price action here unfolding overnight. This is at 6 a.m. This here is around 8 a.m. That it appeared to be doing a little bit of a bullish type action on the LBR 310. We finally broke that cycle, so now that allowed us to look for shorts in there. However, the market just kind of plugged up all day. I had mentioned this morning about the 60-26-50 lows or the 60-51-50 highs. I was pretty far off calling those 51-50 highs. We only hit a high of 51-25. I'll try and do a little better job on seeing those positions for you guys. And then more importantly, maybe we can all capitalize on those someday. Joking, obviously, about calling that because just as soon as I brag about that, I'll be wrong on the next 10 calls. So here, yeah, we broke pretty hard so far overnight, or in the Asia Open here, we broke pretty hard there. On the daily chart, did want to show on the daily chart this gray line here, we were back down, touching off that 20-period moving average. So that's something to keep in mind. Right now, mine comes in at 59.35.46, so 35.50, let's say. We hit a low of 37.75. So we've come down basically almost to that moving average there. On the weekly chart, we do have let's see, that 76 retracement was actually from. Oh no, that's that bigger move down. So the red over here is my from bottom to current top. That was high of 74.75. Yep, that's what I have there. So the 23% is down here at 57.81 is kind of the first zone we'd look at. But we don't know if we're going to hit that. Also on the gap chart, I wanted to show this. This is a 60-minute gap chart. Remember, we have these gaps down below. This gap down here partially filled into this one. This gap here, a little bit of fill into that one, not much. Currently, this pink line right here. Um, Add some weight to that. That is where Asia has hit so far in its initial shoot down. I'm showing the ES currently at about $95 down, and the Nasdaq's about $358 down from the close here today. So we have this gap. Could we have a gap and go further continuation down? That is likely. Could we have a gap, find that 20 period moving average on the daily, bounce up, come back in here and do some back and fill in this gap area? We've got some pretty good volatility that could unfold tomorrow on a Friday the 13th. Oh, let's see. That's not options expiration or anything like that. I don't think. I think that's next week. Let me just double check. But I think options. What is it, June 12th? Yeah, that's next week. Next week's options and next week's VIX expiration and things like that. So yeah, just be aware of that for tomorrow. So that was the gap chart, internals on the VIX. Yeah, the VIX here, we've been pointing out this out the last couple of days that the VIX was kind of leading the way here. Yesterday, it faked us out a little bit by continuing to move down as it moved up, only to close up on the day. Still had that divergence in play coming into today. Today, once again, fooled us. We opened up here. When you're higher on the VIX, excuse me, when you're higher on the VIX, you should expect prices to go down, but instead, prices held all morning. Went up from our opening and just went up. And so that kind of this little head fake there. But one thing I want to try to remember, the whole purpose of doing these kind of things is when we look at this stuff is, when we have these overhead projections here, we saw the 60-minute potential bullishness coming in here. Yes, we were looking for shorts today. Like I said, it was a sell short day on my radar. And so we're looking for shorts today, but keep in mind, that could come into play. And you saw a lot of price overlap here. That price overlap was making a lower high, so we can start looking at positions up there. Had we been bullish this morning, I don't know. You can't live in regrets, can't live in the past. We trade futures, not past. But I want to point these patterns out and see these things. When this finally breaks, we're looking for shorts. The fact that the radar was saying a short sell day, coming up into this pivotal point here, the 60-51-50 or 60-51-25, as it were. Yep. Anyway, that's basically all I have here. It's not a whole lot. I don't have predictions for tomorrow, except for just watching. I'm gonna watch for on my 60-minute or 120-minute to see if we have any kind of a sell ante setup or anything like that. If we get a strong move up, if we get any kind of a sell ante come into play. So, all right, guys, happy trading tomorrow. Tomorrow is Friday. Let's remember it's a Friday. It's not only that, but it's Friday the 13th. So let's trade well, let's trade smart, and let's continue to help each other out and encourage one another and push each other to be better. All right, we'll talk again soon.